Hello everyone and welcome to today's morning report with Charts Appraisals with me, Rich Market Analyst at Active Markets on Thursday the 29th of June. We've got an interesting open actually. We've got this continued move on the Euro and Sterling markets higher. What we have seen in the last few days is Sterling and Euro pushing strongly higher as the central bankers of the ECB, Mario Draghi, and also the Bank of England, Mark Carney, have started to sort of shift away from dovish monetary policy sort of manoeuvres and sort of starting to sort of question whether they could need to sort of factor in tighter monetary policy. And sterling and euro have strengthened significantly. Both the euro and sterling are again up higher today, and that is having a significant impact on the dollar. You're also seeing commodity prices which are higher. Let me just show you the dollar, which has fallen sharply amidst that decline. Amidst the strengthening in the euro and sterling, but also the fact that you've got the oil price, which is rebounding. That's helping the Canadian loonie, and also we're seeing commodity prices as well, which are starting to pull strongly higher as well. So the Aussie and the Kiwi are basically pretty much all stronger. Now the only real major that isn't performing well against the dollar is the Japanese yen, which again sort of reflects an improved risk sentiment that is also being reflected in the fact that we're now seeing a jump in the 2-10 spread. So that comes as the 10-year yield has started to pick up again. Be interested to see how long that lasts, but that pickup in treasury yields is not sort of translating through to a stronger dollar, which is interesting. So we've got all this going on, but as I said, the oil price pulling higher is a turnaround in sentiment there, which is again affecting risk sentiment. So lots key moves going on. The equity markets were stronger yesterday on the back of Wall Street, which was positive into the close. So you had the I think 34 US banks passed the stress tests and sort of opened the way towards further share buybacks and dividend payments, and that certainly helped the S&P 500 significantly higher. Initially, the European markets were stronger, but they're just drifting away again, certainly on the DAX and the CAC. FTSE remains strong, which is interesting, as the commodity prices are positive today. So some very interesting moves we're seeing in these markets. Now, in terms of your data points today, we've got not a huge amount. We've got the German inflation, which is out throughout the morning. It started to come in, and positively as well, across the state announcements. Now that could have an effect because this afternoon you get the countrywide data announced, and across CPI and also HICP, both are expected to drop back by 0.1%. So could that mean that with the statewide inflation going higher, could it be that data actually picks up? It's possible this afternoon. That could give the euro further boost this afternoon. Watch out for that. Other than that, you've got the US growth data. Final numbers for Q1, which is expected to be 1.2% again on the final reading, which is exactly where it was on the second reading, or the preliminary reading as it's referred to. And jobless claims 240, basically in line with where it was last week. Now, my chart today is the dollar CAD. Now, I spoke to you about the strengthening oil price and weakening dollar, and that has pulled sharply lower on the dollar CAD. Now you can see this 1.3 level, 1.3 big figure, is a massive support since September. It's tested in September, October, January and February, basically all holding. You had the briefest of sort of intraday move back in January below that 130 level, but you've never seen it close below it, and the market is testing it again today. 130.03 is the low before a rebound. Now this is coming as the RSI is at record levels. 28 basically was the close yesterday. That's the lowest in 3 years on the RSI since July 2014. So it is at record levels. It does not tend to go below 30 though, interestingly, but that doesn't necessarily stop as you can see with this sort of Q1 2016 sell-off. Doesn't necessarily stop the decline, it just might give it a little bit of respite, might drive a little bit of a technical rally, but ultimately you do see when the trend goes with dollar CAD, it does tend to trend quite strongly, and you can see the MACD lines which have given another bear kiss. Stochastics falling away. It doesn't look great. I think selling into strength is the way to play dollar CAD at the moment. And if we look on the hourly chart, you can see here where you've sort of broken down that old support around 32 area, and it's sort of it has obviously gone quite strongly into negative territory on the hourly momentum indicators, but I think anything around sort of 40 to maybe 45 seems to be sold into at the moment on the hourly RSI. You can see a resistance initially around about 130.50 area, and then 131.15 before you sort of start to get the overhead supply of all this sort of 132 figure area resistance. So I think obviously with yesterday's big strong bear candle, there is an element of possible unwinding that could be seen, but I think further pressure is likely to be seen on 130 big figure, and it'd be very interesting to see if it gets broken to the downside, because that would then sort of open up subsequent supports. September low 28.18 and subsequently the August low of 27.60. So with that in mind, I wish you good luck in your training today, and I'll speak to you later. Thank you.